What's up? Happy Sunday. Go ahead and tag everybody in here. It's going to be a fun session because we have a lot of monthly and quarterly charts to look at. We look at major indexes and kind of update those levels, etc. Give people a few minutes to hop in. Busy day. There's elections right now down here in Brazil, so it's been busy. People are going nuts down here. It's basically like a 2016 election process once again. Already been through it. Don't want to go through it again. Yeah, it's pretty bad down here. What's going on? What's going on right now? I think they should have full results in the next 2 or 3 hours. They're super efficient down here, and you're required to vote. For those of you that don't know, they're watching the stream. I'm in Brazil. You're required to vote by law. If you don't vote, you get fined. If you don't pay the fine, you go to prison. The only way you don't vote is if you're medically exempt or if you're in some foreign country and the voting station is too far away. And you have to request like special privileges to not vote. So that's going on right now. I'm going to start here in about a minute and a half, 2 minutes. We'll see how many people are going to hop on it. Sunday night, folks. It's the beginning of quarter 4. Q4 starts. We're going to start the session off by going over, we'll go through the Apple trade probably, since that's the trade that I know of a few of you guys are in, and I think that's one of the major trades that we haven't gone through as a group yet since it's hit. We went through AMD, we went through IP, so we'll go through Apple tonight. Then we're going to dive into Koifin. We're going to update our year-to-date ideas for Q4 here, sector and industry-wise. We're going to update our index levels, as we always do every quarter. Not sure if Mike's going to be on right now, but if he is, Mike's kind of the guy that takes the lead there on those index levels. They've played out very, very well every quarter that he does that, and then we're going to hop into FinViz, and we're going to scan a lot. So while we're waiting for people to join, anybody want to bring anything up that they saw happen this weekend? Anything in particular worth noting? What was the Burry tweet? Feel free to post it. For those of you that are on stream, we're waiting for the guys in the group to hop on. Give it another minute, we'll start. Feel free. I'm watching the chat here, so if you have any questions, I might not answer you immediately because you are off to the side. But if I read the stuff that you guys are posting on the YouTube stream, feel free. I'll try to answer the questions. Yeah, we're going to go through Apple, actually. We will go through Apple. We're in Apple already, so you're actually going to see how we were able to catch it and what we're going to do with it. Still a lot of overvalued companies? Yeah, probably. There's a lot of froth still in the market in certain areas, right? Tech and semiconductors are two of the most obvious, right? Not necessarily saying they have to drop to the 2020 highs, but if that's the trend, everything is dropping to the 2020 highs. Tech and semiconductors still have a while to go. So, all right, give me 1 second. We'll start. Take my sweatshirt off because I'm in the damn jungle. It's hot as hell. This morning, there were 218 primary stock listings in the U.S. with a market cap over $1 billion and less than negative $100 million. 29 of them market caps over $10 billion. Saying it all again, silliness has to go. You can always depend on this Gurgavin guy to be on every single major stock tweet with his signature all caps bullshit. Okay, so essentially Burry is just saying that there's still too many overvalued companies. Got it. Okay, let's go through Apple. So somebody on the stream just asked what our idea was on Apple, but since we're already in the trade, and it was the one major trade that we're still in that we haven't gone over. We've gone through AMD, we've gone through IP, we're going to go through Apple. How Hanno and Dustin were able to catch it from the very beginning, and there's a few of you guys that hopped on afterwards. But let's go through Apple first, starting from the very, very beginning. So if you're watching the stream, you're going to get a macro view of why we were able to catch Apple and how we're able to catch Apple. And it all starts with sector weakness, right? So the guys in the Discord, we knew that we wanted to be short the tech sector off of a potential 131, 132 breakdown of this rounded top horizontal level, but we didn't really necessarily want to push into any tech shorts until we started flirting with the 120 area, or not 120, the 125 area, right? Remember this conversation we had? It's probably 2 weeks ago. For those of you that are watching the stream, they entered the Apple shorts. Let me go back and double check and make sure I know the exact date. September 20th. So they have been in these shorts now for almost 2 weeks straight, the Apple shorts. And it all starts with this XLK chart, right, guys? We knew that we wanted to continue to add, at the time, we wanted to continue to add shorts into growth areas, specifically tech. And then right after this, we started looking at potential shorts in consumer discretionary, right? So we knew XLK was the area of the market that we wanted to start shorting 2 weeks ago based off of the 130-ish breakdown, this nice little horizontal level break off of a rounded top. And we knew we wanted to add into size on the 125 breakdown. So we looked inside of the XLK sector, right, the tech sector, and we knew there were multiple industries in there. A few of the industries are things like FDN, which are your internet names, right? So you have your tech companies. It's like an umbrella. And FDN is going to be one slice of those tech companies. This is internet companies, right? We knew that FDN was an area that we wanted to potentially get short. We knew that IGV, or software-related names, was an area that we potentially wanted to get short. If you're watching the stream and these are the first times you're being introduced to these ideas, these are tranches of the market, subsections of the tech sector, right? These are industries within that tech sector. And we knew that SMH was your other part of your tech sector that we wanted to get short. And that's what we were just talking about. There's still a lot of froth in the market. When we look at XLK and we look at things like SMH, we still have a long ways to go down towards those 2020 highs. And as a matter of fact, when we had this conversation about the semiconductors, we were still 25% away from the 2020 highs. And that's kind of been our general idea for most sectors and industries. We're going to come back down and retest those pre-COVID highs. Well, when we first started talking about this 2 weeks ago, we were 25% away. Now, we are roughly 18% away, 17.5% away. So there's a reason why we were shorting AMD. We're still short AMD. Some of you are short TSM. SMH is doing exactly what we had expected SMH to do. Break below our risk on level, sub $200, and start to make a run at those 2020 highs. Now, Apple in particular is going to be an IGV related name. And if we look at this IGV chart, we see that we broke a horizontal level at the 265 area, which just so happens to be those 2020 highs. So I'm going to go ahead and post that in Discord really quick. But all of this stuff should be relatively fresh in your guys' memory because we talked about this multiple times last week. We were trying to attack the software-related industry within the tech sector. And it just so happens that Apple was giving us an opportunity. But the problem was Apple, being the resilient company that it is, was holding up better than most of the other names within the same sector and industry. So saying that we have inside of TTI, we definitely didn't coin this, but we believe in it. It's generals get shot last. Generally, that means the blue chip companies, the best companies, quote unquote, in the world, they might hold up longer than everything else, but eventually, as the indexes crack, the big companies that are holding up the indexes will eventually crack as well. So with Apple, it was showing relative strength, but it was in a sector and an industry that was breaking to the downside. And so some of the guys inside of TTI took that as an opportunity to front run a breakdown. Everybody in our group saw the 151 area. You can see the trading plan to the upside. I'll post the chart in Discord as well. Don't post about that shit right now, Josh, or I'm going to get sidetracked. I can hear it in the background anyway. The 151 level back in June, July area, we went long. Now, because we're testing it from the upside coming down, we're going to use it to go short. It's a sentiment level, right? You can drag this over to the left and you can see that it was a previous area of resistance, support, resistance, support. It's very basic technical analysis. This area, for whatever reason, $150, the market likes to argue there. So our trading plan is very, very simple. If the overall sector and industry are bullish and we're above 150, we should be looking to go long this at some point. And we did. We caught a majority of this move, actually. Hanno in particular, I think, who's now short Apple, rode Apple up for a lot of this movement for some nice profits. Now on the way down, they were seeing weakness in the industry and sector, and so Dustin and Hanno ended up taking it short at this pop-up near 156, expecting a 151 breakdown. Right? Everybody remembers this conversation we had last Sunday during the strategy session where we said, listen, they're front-running this, but if it does break 151, we expect this to capitulate. Right? The 151 capitulation zone. And so they took the 156, 155 area opportunity on a green day, which is super important inside our group. We like to go short on green days, and we like to go long on red days to get cheaper contracts if you're an options trader. They took the opportunity to load up on $140 puts. This was our original price target, $140. So they grabbed November 140s. I believe Hanno grabbed put debit spreads to lower his cost basis. And of course, you know what happened last week. Some news came out that demand was weakening with the iPhone 14s. Doesn't really matter what the news was. The chart was telling us that maybe somebody knew that news already, right? And we were simply interpreting the drawdown in Apple that had been occurring since August. We were like, listen, we want to get short Apple, but we need to make sure that it makes sense from a risk level standpoint. The 151 area was the area we wanted to attack. You used the opportunity to get short prior to that capitulation move. Therefore, you guys are rewarded more than the people that waited for the 151 break. But the original 151 area that we were targeting as a group still worked as a risk on level. And everybody that is currently short Apple within TTI, who has been short for over a week, some of you 2 weeks, are in profit. It makes sense. And for the newer guys inside TTI, this was actually something that we used to joke around about all the time. What you'll notice is price typically gives us clues prior to news coming out. Why? Because it's asymmetrical. Whether or not you believe that people have insider information and whatever, they do, right? We're not fucking naive in here. It's not Goldilocks and rainbows and shit. The market is manipulated to a certain extent. That's fine. What are you going to do about it? You're either going to bitch about it or you're going to figure out a way to pull profit, fully understanding that you are not privy to the same information as some people. You're just not that special. I'm not that special either. What is our secret weapon? Our secret weapon is price as technical traders. The market was selling Apple off. And so we said, listen, there's a reason why the market doesn't want to own Apple. We don't know what that reason is. We chose a risk on level that has made sense for us in the past. We used that risk on level to get short. And it just so happens that some bad news came out and Apple capitulated. Here's my question to you guys in the group, and because we're streaming. Is that considered lucky if you're able to replicate that process multiple times a year, where you find anomalies on a chart, you take the long or short, and then news comes out a week or two later? Would you consider that luck? Because I wouldn't if it happens multiple times in a year. And that's something that if you've been here for 6 months, you've experienced many times in here. And if you're newer, we have some guys that are wrapping up their first month in here. This is a great example of that Apple, of what we're talking about with this Apple play. News comes out after price has already started moving in that direction, and then obviously you get the aggressive move. With Apple, we had the capitulation move. Dustin is up 100 and... What are you up, Dustin? 120 or 140%. Hanno, you hopped off before we were able to ask. Hanno has college shit to do right now anyway. 126. Hanno's up over 100%. Dustin's up over 100% on the AMD or the Apple play. That's how we're able to catch this stuff. Is it starts with sector and industry weakness. It's what everything we do in here starts off with analyzing where weakness is when we're looking to go short. Find areas from an individual company standpoint that give us clear risk levels, and then take the trade. All right? So there should be no questions regarding the Apple trade. The guys that are in Apple are already in. You're up. I think everybody's up over 100% at this point. So you know what to do. Manage a portion of that trade. Make it free. Don't give a huge amount back. For the guys that are not in TTI or watching the stream, we typically take profit at 100%. We close half the position. We turn it into a free play and then let the other half run as long as the trend is still moving in the direction of the trade. You want to try to let that stuff have as much time as possible. That's how you get the 1,000% winners like Dustin and IP. All right? Okay, so Q4 starts tomorrow. This is a big deal for us in here because we base a lot of our market analysis on the quarter-to-date chart for Koyfin. And I always remember Callow in one of our first one-on-ones where he was like, yo, it doesn't make sense to use quarter-to-date right now. Callow joined like first or second week into the quarter 3 or quarter 2, I don't remember. And it didn't make any sense. So I'll ask you guys really quick. What do you expect to use on Koyfin right now? What would you use in the U.S. sectors tab, since quarter to date isn't going to work for us for quite a while? Start with year to date for sure. So let's start with year to date. For those of you on stream, I'm going to have the year to date chart up here. I want you to look at this. Sector performance year to date. It's normalized performance, so all of them are starting at 0. Right? January 3rd, January 3rd is the first day the market was open. We base everything off of this general idea of where is money flowing in and out if we're looking to go short, based off of sector performance. We understand that the market is made up of multiple sectors and they are not all treated the same. There are opportunities where the market will be falling, but the sector will be moving up, such as energy. This is how we were able to catch almost a 6-month play in energy. This is how if you've been following our content, 2,000+% winner in Chevron was because we're able to identify areas of the market that are showing relative strength and relative weakness, not just zoning in on the indexes. We'll update the indexes as soon as we're done with the Koyfin portion here. Year to date, has anything changed, guys? For the most part, we've said everything are in relative drawdowns, including energy, by the way. Energy posted a few back-to-back up days in a row last week. But from a year-to-date standpoint, this is very clearly a lower high, lower low situation. Is there anything here that stands out that maybe we should change in terms of our analysis? Not really, at least not yet. At least to me. There's not really a whole lot that's changed here. We want to continue to potentially look short, but keep in mind, Q4 is starting tomorrow, which means earnings are coming up. I want you to think about something really quick. I don't want you to specifically trade based off of this idea, but I want you to have this in the back of your mind when you're evaluating potential areas of the market that are consolidating right now. What did we see going in or coming out of Q2 and potentially Q3 that might impact Q4 earnings? Lowered guidance, right? What happens when you lower guidance? Exactly. It's easier to hit. What happens when earnings with lowered guidance get hit? You beat. Exactly. So we're coming into a brand new quarter. The market is beat to shit this year. This is one of the worst performing years on record, by the way. We had so much froth in the market. This is one of the worst years ever. What happens when companies start to post beats? I'm not inferring that the market is going to pop up here. What I am saying, though, is there's that added risk. And so what I think our game plan should be, at least over the next 2 to 3 weeks, and we know how to spot this, look for areas of the market that are starting to carve out rounded bottoms. Right? That is a telltale sign of potential reversals coming in on earnings. We've traded these a million times in the past. We know what rounded bottoms are. Think of an accumulation zone within the Wyckoff market model after an extended markdown period. We know what these look like. I posted the 3-month chart here. Has anything changed from a 3-month standpoint on these sectors? No. But we could start seeing some flattening of these downtrends here as the market starts to prepare for earnings season. Let's go to industries. Nothing here looks bullish yet whatsoever. Everything looks like shit. Guys that have been consistently buying dips and trading them, not like long-term holds, but legitimately trading them, have been beat to shit for the entire Q3. There's been no respite in Q3 whatsoever. I think there was like a 6-week period in Q2 heading into Q3 that we took advantage of, but for the most part, it's just been sell the rip every single time. Year to date and 3 month. Has anything changed from this standpoint on an industry, or from an industry perspective? For those of you watching the stream, sectors are tranches of the overall market. Industries are sub-sections, if you will, subsectors. Has anything changed? So for this XLE sector, there are AMLP, XOP, OIH. These are all areas within the energy sector, and we can actually subsection those out to find individual companies. No, nothing's really changed. Everything are still in drawdowns, which starts to potentially give us what we need for that rounded bottom to start carving out. And what I think, I'm inferring here, but I'm not taking trades based off of this. I'm inferring that this upcoming week is going to give us the kindling that we need, if you will, to start forming those rounded bottoms. So this is an idea that we're going to be looking for in the market, which means that our scans are going to have to reflect that. We're probably not going to be getting so many hits across the 50-day low scans over the next week and a half, because you're going to see names start to consolidate, potentially maybe hit a series of higher highs. Whether or not those are going to be strong trends or not, I have no idea. But that's just a theme that we're going to want to look for. We don't need to be married to these positions. If we see an opportunity, if sectors start showing a little bit of relative strength and individual companies start showing us a series of higher highs within a rounded bottom, it's in our best interest to take a few of those positions, just like we did 3 months ago. We took advantage of that 6-week rotation into growth. We can do it again if it starts to manifest. Reason why I'm saying all this is because it's so easy to be bearish if you're watching the TV shit, if you're on FinTwit, if you're on Stock Talk. It's very easy to read Michael Burry's tweet and be like, yes, yeah, for sure, the market is still way overvalued. It's not as easy as just buying a put and waiting. You guys all know that if you're in here. For those of you watching the stream, if you've been trading this year, it's not easy. It's not as easy as just buying a put and waiting. It just doesn't work. You're going to blow your positions up, because all you need is 1 week against your position and those things go to zero. Options are hard. So look for that relative strength potentially forming here. Since we have Mike in here now, let's update the 3 major indexes for levels. Mike has been doing Mike, I'm putting you on the spot. But Mike's been doing this for us for almost the entire year, and I'm not going to lie, Mike has pretty much nailed it. So, are you here right now, Mike?
Yep.
You want to run through SPY, the Qs, and IWM and just give us your general ID here for levels?
SPY is breaking down.
What's a realistic price target here on this SPY breakdown? If we do continue, because you're right, the level flipped on Friday. We got the close below the 362, 363 area that we were using for the next level shift down. For those of you watching the stream, these are sentiment levels. Above this, we go long. Below this, we go short. Above this, we're trying to go long. Below this, we go short. Here we go. Again, we're below this, so we're looking to go short still.
Down for me is 340.
I have it too. You have a high volume node here at that 340. It just so happens to coincide with the 2020 highs. And like I said, this is a theme. We've been targeting the 2020 highs in nearly every single sector, industry, and individual company this year. Is it out of this, out of the realm of possibility that SPY could come down and touch those 2020 highs? No, absolutely not. So let's call a spade, SPY 340. That's kind of the next level shift down. Do we get there? No idea. But that's where the next real area of support is, and we're confirming that with volume, right? Those of you watching the stream, it's this high volume node here that we're looking at to potentially be defended. And actually, as a matter of fact, from 357 down to 340 is the lowest amount of volume until you get down into like the mid 200s. So if there is an opportunity for SPY to come down and test that 340 area, I would assume that it would happen quicker than usual because there's no volume down here. So something to consider there with SPY. Let's go to the Qs. What do you think? Once again, stream sentiment shifts with the levels.
Next level down based off of that same peak February pre-COVID high.
All right.
VPVR says we're going all the way down to 187 though.
I can't imagine. Yeah, I can't imagine.
That's really scary.
There's more froth in the market in the Qs than there are SPY, right? We know that because of tech. And there's still an 11% potential drawdown from current price to those 2020 highs. So we did have a level shift once again on Friday. The sentiment level that we had was 277, 278. We're currently at 267. It's insane to think about. We're down here, but this is why we prep like this. Like, it's, the shit happens regardless of what people want to happen. We have to be prepared for, in this case, the best case scenario since we're short. But all intents and purposes, we broke the level that we wanted to break on Friday. Firmly closed into 2-year lows, by the way. Is this 2-year low? Almost 2-year low. And yeah, there's really no volume here until about 244, 245. And that 240 area is those COVID highs. So we have 340 SPY, QQQ. We have potentially 240. Let's do IWM.
IWM is just super hard to read right now. We're below the pre-COVID highs.
So what's the relationship with IWM and the overall market? Anybody in the group? Why do we care about IWM so much? It's risk on for sure. Small caps, right? Generally, small caps lead in both directions, up and down. When the market wants to start rewarding risk, they buy the riskiest parts of the market first because, generally speaking, they have the most opportunity from an appreciation standpoint. You're never going to see 1,000% move in Apple in 2 or 3 days. You're not. But you can see it in some of these shitty small cap biotech names, some of the meme stocks. Those are all small caps for a reason. You're not going to 100x a large cap over a week or two, but you can with small caps. So when the market starts to reward risk, they go and buy small and micro caps, and a lot of that is captured in IWM. What happens when IWM is breaking 2020 highs before SPY and the Qs? We will go, well, yeah, that makes sense. When the market is punishing risk, they're going to be selling the shittiest stuff first. It makes sense, right? They're going to be selling the riskier parts of the market first and trying to hold those blue chips, those apples, those generals. Does it surprise you that IWM is already below the 2020 high, but the Qs and SPY are not? It shouldn't. This is why you're in this group. This type of shit should matter to you. And this is how you build your thesis out through Q4. If small caps are already below 2020 highs, is it reasonable to expect potential 2020 highs being tested from the rest of the market? I would say yes. But what happens if IWM starts to form a base here? What did we do last time it happened? Anybody remember? Specifically with IWO.
Energy took off.
Yeah, that's true. A lot of IWM is small cap, energy, and finance, both of those. Matter of fact, really quick. If you're watching the stream, this is a paid version of Koifin. You're able to do this deep dive shit. But for IWM, 18% healthcare, 16% financials. So actually 16%. So a lot of IWM is small cap finance. I don't think they've 6% energy. I don't think they've updated their stuff yet. But yeah, banks are 10% of IWM. I mean, there's more bank exposure in small cap, the Russell 2000, than there is biotech. So if we see IWM start to build out this base, you know, we understand what that means for the overall market. They're going to start wanting to put more risk in the market when you're buying these small cap stuff. I'm showing the stream right now, IWO, and the reason why I'm showing it is because this was the reason why we were able to grab this push that lasted about 3 weeks. We grabbed based off of IWO, which is your small cap growth. I'll post it in Discord for the newer guys. I don't think there's some guys that are in here right now that weren't here when we traded this. But IWO, if you think of IWM as your small cap ETF, the Russell 2000, subsection that out to IWO and IWN, growth and value. Riskiest part of the market is probably going to be your IWO. It's your small cap growth. And so when we see small cap growth start to put in a base, a little bit of a rounded bottom, I just showed you, we identified that and we said, the market is starting to reward risk. Where should we be going long? Like that. We didn't even think twice. We just went and immediately looked, what are the shittiest of the shitty stocks? What are they doing right now? And it just so happens that we were able to grab things like XBI and other small cap names, and it translated over to mid and larges as well. But small caps really took off. And we bought biotech names. We never buy biotech names, but they showed us an opportunity and we took it. So that's what we're going to be wanting to look for during this Q4. Are there going to be opportunities in the market that give us a compelling reason to go long? We have the earnings season coming up, lowered expectations, higher probability that they're going to hit and beat those earnings. Is the market going to reward them? We're not in the business of trying to predict. We don't have a magic 8 ball. We're not Nostradamus. We don't sell the fucking dream like that. But what we are going to do is we're going to be realistic, look for those areas of the chart. If we identify them, we can constructively build a plan to capture some of that price movement, potential price movement, I should say. Okay, so as of right now, based off of Koifin, the only thing I'm going to show one more thing really quick, and we can talk 2 seconds about it, is factor analysis. If you're watching the stream, this is essentially just looking at market caps versus the S&P 500. You have your year-to-date and you have your 3-month. This is really higher level stuff, so if you don't understand exactly what it means, don't worry. But we're still seeing a relationship where IVE is being, at least on the year-to-date, IVE is being rewarded slightly. We're not drawing down very hard, but also IWO over the last few sessions as well. So SPY and growth and value, they're all range-bound. None of them are necessarily getting sold off any harder than the rest. If we look at the 3-month, once again, the relationship exists. Growth and value, neither of them are necessarily capitulating. So what can that lead us to believe? That there isn't necessarily a rotation going on between growth or value. It's the entire market that is being sold off relatively equally. And that matters to us. We might not be able to directly take a play based off of that. But when we're looking at, okay, if we have a decision to make between selling energy or selling tech, and we look at these relationships between market caps and the S&P 500, there is not really a huge difference in what you're trying to sell here, right? Exactly, Dustin. They both suck. Both areas of the market suck right now. But knowing that, over the next week or two, we can start to look for relative strength in those market caps. That's how we originally found IWM and IWO. Was this relationship in the factor analysis chart with IWO against SPY. You go back to July, you can see that we were leading. Very rarely does IWO lead the market unless risk is flowing back in. So we are at the top over the last 3 months. If this starts to break out, remember this is a normalized performance against the S&P 500. It's not an absolute performance. We don't necessarily want to go buy IWO. But if we start to see small cap growth, show relative strength against SPY, we know what that means. We just traded that a few months ago. We can start to look at those. All right? Any questions regarding that? The script in the upper right-hand corner is a custom-made script from one of the guys in our group. It's not anything crazy, but after the stream, I can help you look at some of the stuff with it. It's just a bunch of different stuff added together, and you just made it look prettier. None of it is mind-blowing. Okay, let's move on to FinViz. Let's scan, boys. For those of you watching the stream, I advertise that we scan through hundreds of charts a week. I'm not lying. Good luck. We call this the Thunderdome. Let's start with 50-day lows. I'm going to set the chart up or the scanner up and then send it over. We scan through hundreds of charts, and on busy weeks, thousands of charts. I'm not kidding. This is why we're able to buy things like, really quick, IP. We shorted this, and they're up over 1,000% inside of the group. Who the fuck was shorting International Paper Company? I don't know a single person on social media that even knew that company existed. I didn't. But we found it through FinViz. It's crazy. I'm going to leave change from open off. There is your 50-day low scan. Average volume over 1 million. Price over $20. We get rid of some of the stuff that we're not going to be able to necessarily trade on the chain anyway. Optionable and shortable. I forgot. I need to start Tastyworks. So we have 12 pages here of charts. So let's go ahead and start with this. And then we're going to flip over and go 50-day highs because, like I said, there might not be a lot on that list yet, but we want to start looking at them. What is showing relative strength right now? Just in case we do start carving out. I'm actually going to turn off funds and stuff. Let me repost this. Sorry. All right. Tastyworks is up. Let's scan. Let's do it. Josh is already on it. Let's look for horizontal level breakdowns. If you're watching the stream, the setups that we trade are the exact same nearly every single time, and there's a reason why. It's because they work, and there's no reason to try to reinvent the wheel. If we know what we're looking for and there's a play to be made on the chain, we will take the trade. You're going to see a lot of names here that you probably see, and you're going to scream bloody murder short it or buy it. We are very strict when it comes to the setup that we take because we have statistics behind us backing it up. There's a reason why realistically, there's a reason why we were able to post consistently big wins, and it's because we play the exact same fucking setup every time. So here's a good example. Bank of America. So we already have some financial exposure to the downside, right? We have the JP Morgan. You guys can, on stream, you'll see damn near every single setup is the same. We took the JP Morgan short. We have a Morgan Stanley short on the books here, trying to front run this potential $74.50 breakdown. I believe that's minor up spike, or is that around break even? It could be minor red actually because of the consolidation, but still looks good. We have a Blackstone short here. You can see that we capitulated down below $88, forming somewhat of a potential consolidation before a break to the downside. I think that's all we have. JP Morgan, Blackstone, Morgan Stanley. Bank of America. Oh, we have Citigroup. I apologize. We have look at so Citigroup is a great example of why we're looking at Bank of America now. So Citigroup, we wouldn't want to short here. We were already capitulating. We're getting the move that we wanted. JP, you're in those, and you're looking for a potential $40 test, I hope, because that's what makes most sense. Bank of America is the exact same setup. We could potentially get a move just like Citigroup. So I posted that in Discord. And really quick, just to double check on the chain here, Bank of America November is plenty of open interest, and it's not an expensive play. So just because I'm on this right now, let's look for a potential play on Bank of America. I'm not saying this is a trade that we're going to be taking stream, just something I'm looking at. $26 coincides with a high volume node. Just so happens that the $26 puts for November are going for $55 right now with a 0.17 deltas. There's a trade idea right there. $26 puts coincides with a high volume node that kicks in at $26. $26 puts going for $55. November 18th, you have 47 days till expiration. IV is below 50, so you don't need to spread these if you don't want to, but you can spread these. Buy the 27, sell the 26. You're going to get away with $18 cost basis for an 82 max profit, but the probability of those hitting in the money is drastically lower. So $26, a potential trade idea that we can go through at the end of the session. And if you're watching the stream, people inside Discord are throwing charts left and right. So essentially what we do is we go through these as a group. Everybody posts charts that they see, and then we run through them. Starting in about 5 minutes, I'll start running through the ones that they are posting. Randy asks, when you get a break of support, do you wait for the close on the daily to confirm it and jump in as soon as price breaks the level intraday? Yes and no. We utilize something called a BRB entry, and then we didn't necessarily make it up, but we have tweaked it to fit what we try to do. Essentially what we do is we wait for a confirmation of a breakdown on the daily, you're right. So like it doesn't matter necessarily have to be a breakdown. It could be a breakout as well. But we also add in Arvo. So if you look up here, upper right-hand corner, we have like an Arvo indicator, but you can also just use a volume histogram. This is above 1. It's a 1. It's above average volume on that particular day. So since we have Bank of America up, what we would be looking for is a break below our sentiment level, our risk level, right? A close below with high volume. If there's high volume on that breakdown, we do not expect a continued move immediately. As a matter of fact, statistics show that around 66% of the time we're going to get a pullback in towards the original horizontal level breakdown. And we utilize an academic study by Thomas Bulkowski that tells us that 66% of the time on high volume breakouts, not necessarily down, but could be up as well, you get a pullback within the next day or two. So what we do is we go, okay, if there's a high volume breakdown in Bank of America tomorrow, we would expect something like this. A move down, and then a move back up into this area. And then another move to the downside. It makes sense, right? That's like trading 101. We're going to try to buy it on this day. Doesn't always happen perfectly, but this gives us two distinct advantages. One, cheaper contracts with the overall same idea. If you buy it down here and you buy it up here, you are getting about 30 to 50% discount on your contracts by buying up here. That immediately skews risk to reward in your favor while still giving you the same trade plan, right? The price target is the same. You're playing this breakdown, you're targeting $26. Wouldn't you rather buy it at 30 something than at $29.50? You're going to get that discount. Also, you're going to be able to use a closer stop. So if you buy down here at the $29.50, $29.75 area, your stop's going to be somewhere, above $30, $31. Your stop's going to be the exact same if you buy it at 35 or 30.50 rather. Same stop, same price target, but the difference in how much you're paying for the contract skews risk to reward. This might be a 3-to-1 setup. If I can draw here. Right here you buy, that might be a 3-to-1, risk 1, reward 3. This might be a 4-to-5 to 1 because you're waiting one extra day and getting those at a discount. So yes, we do wait for the confirmation, but we do not immediately hop in the very next day. We wait for a pullback, and like I said, it happens in a breakout as well. So we utilize that more often than not, that concept of buying pullbacks in breakouts or breakdowns with the understanding that it's going to continue in the direction of the breakout. We're just looking for a better fill, if that makes sense. And I can confidently say, and you guys in Discord can agree or disagree, I'm assuming you'd agree, that is our highest performing setup. And that's part of the reason why we're able to win 45% of our trades and still be profitable, because we're able to skew the risk to reward so heavily in our favor when we enter that when we hit those trades, we're getting like 4 or 5 to 1. It's insane. And it's the same trade idea. I want to stress that. It's the exact same idea. We're just getting it at a different price. Okay, I'm going to start going through some of the charts you guys are posting. Keep posting them. Okay, so Josh is posting. For anyone that is newer, Josh is from the UK, so he's able to actually, he's not trading. Josh, are you trading options right now, actually? I should ask you that. Are you still shorting through swaps? Nope. Okay. Okay, so he's posting FTNT. Let's look at the chain first. If you're watching the stream, you can see this is an obvious pattern that we like to play the breakdown of. It's a horizontal level. It's been tested multiple times. We have a low volume zone to come down. RSI is below the 50. ADR is above the 3. That means this is a relatively volatile name intraday. We're looking for a capitulation move off of probably the $47, $48 area, potentially down towards $40. So that's going to be an above 10% move. Yeah, 15% move. That's exactly what we're going to look for. Next problem, though, is you got to make sure that there's a play on the chain, which there's not always going to be. And in this case, FTNT for the Novembers, there's a decent amount of open interest on the Octobers, but we don't trade anything less than 45 days out. As of right now, the Novembers do not have enough open interest for us to be opening anything on FTNT. So if you're an options trader, you need to know that there are multiple things you need to check before you enter a position. It's not just, does the chart look good? You need to confirm it with contracts. Otherwise, you are always going to be a consistent loser. You have to be able to skew that risk to reward in your favor, and you have to have things like open interest, etc. End phase potentially breaking, not something I think that we want to take here, but Ian actually traded this to the upside off of the original change of direction trade. It was a day trade turned into a swing trade. He nailed this, but I don't know if we're going to want to trade this to the downside yet. ANSS. So Josh is posting tech names here. May have already missed the ANSS. Actually, this might be a BRB setup. We just talked about this on stream. So this is a candidate for a BRB setup, right? We have a horizontal level here. They want to be relatively easy to identify. You don't need to, don't want to get in the habit of trying to build something that's not there, right? So easily identifiable horizontal level. You got the breakdown with the confirmation and the high RVOL. This is a candidate for a pullback tomorrow before a continued move to the downside. No opportunity on the chain, so can't trade ANSS. see what else. CDW. Josh, do you have a volume filter on your scanner? The setups are there, but there's no volume on the chain whatsoever, and I think that potentially you don't have the million plus volume on there because there's just no open interest on the chain. Once again, stream, this is a valid horizontal level potential breakdown. I'm going to go ahead and turn on the EMAs here so we can get a general idea of how these are consolidating, but once again, there's no open interest on the chain. So we looked at Bank of America. We'll look at that one more time at the very end. Let's see, SWKS. The move on SWKS we probably already missed. Could be a potential BRB tomorrow, but I don't know. I bet you if we look at the contracts right now, because if you look at the way that this is capitulated over the last few trading sessions, these premiums are probably jacked through the roof on SWKS. Let's see. There's enough open interest on SWKS to get short, potentially. Okay, so here, let's make a tentative plan. We would expect SWKS to be a BRB for tomorrow because they had the high volume breakdown, right? 1.41 Arvo off of the horizontal level. The way that this has capitulated over the last 3 days, though, I would expect SWKS, the premiums, to be jacked. And actually, they're not that bad. It's not great. But the Novembers are going to give us 47 days to expiration. You're at 55 IV, so it's really up to you whether or not you want to put debit spread this. I would probably err on the side of caution and say yes. You can buy the 75 and sell the 70 right now for a $90 max potential loss for a 410 max profit. That's a 4.25 to 1-ish risk to reward. SWKS. I'm going to go ahead and post the chart. It's not, to me, an A+ setup. But the setup is there. So potentially tomorrow, if we get a pullback, think about it this way. If we get a pullback tomorrow up towards $89, $90, that original 75-70 put debit spread is going to be skewed even more in our favor. 5.5 to 1 instead of 4.25. So potentially tomorrow it could be worth it. But as of right now, maybe not. We'll see how we pull. We'll see if we pull back tomorrow morning. See who called that one out. JP, you're on it tomorrow morning. Let us know what SWKS is doing. We get a pullback to 90, we can look at the chain and potentially grab that 75-70 put debit spread. What is this? This is a tech name, right? Semiconductor. I will say right now, I don't think that you do, but if you already have, for those of you watching the stream, we're short AMD and TSM right now. If you already have semiconductor exposure, don't go opening up a bunch more. AMD, by the way, just so everyone's fully aware, I know we've already went through this at the end of the session on Friday. AMD is already more than halfway through its move. So if you're short AMD, you're closer to the price target than not at this point. So keep that in mind. Don't expect huge moves off of where we're currently at in AMD anymore. Now it's going to be start to manage your position. TSM has a little bit more ways to go. You're about halfway through the move. AMD is more than halfway through the move. There's a decent number of you that are still short in these areas of the market, which you should be. I just want to point that out. So if you have that exposure already in AMD or TSM, do not open up SWKS as well. If you don't, potentially an opportunity. FTNT, there's no opportunity on the chain. Unity. This is software related name, or is this internet software? This is an IGV related name. You can see a previous trade idea that we had. I don't actually think anybody took it off the 47 pop-up, but potential all-time low incoming on Unity. The only thing I don't like about the Unity trade, and I'm sure, Josh, you'll agree, is that we're starting to run out of real estate on the chain here. 105 IV. God damn. Yeah, I'm not in love with the chain here on Unity. There's only like 5 strikes that are available in our direction. So Unity's probably off limits. COF is actually a name that Tim called out 2 weeks ago. It's a bank name, right? Yes. Yeah, 2 weeks ago I have the original trade idea on the chart here, but nobody took it. There's a reason why. Let's see. Was it the chain? Or was it because people went... It looks like it was the chain. There's a reason why people didn't take the COF short and they took other bank shorts instead. It's the chain. I do like the consolidation underneath the horizontal level break that generally leads to continued capitulation, but the chain I think is already juiced and the play is kind of expensive. So $250 per contract on those $80 puts. That makes the most sense to me from where we're currently at 92. And there's no real opportunity to spread this. There's not enough open interest on the chain to be able to spread it. So if you're riding with zero financial exposure, maybe a COF $80 put if your account's big enough to justify a $250 position. But I think there's better opportunities than COF, mainly Morgan Stanley. Because Morgan Stanley's going to be cheaper. Still, there's a good breakdown 2 weeks ago. Marcos AMAT. Here we go. Here we go. This is what I'm fucking talking about. AMAT's held up by nothing until $70. We're currently at 81. That is a 14% potential move to the downside in AMAT. Here we go. You're watching the stream. This is what this is going to err more on the side of an A setup. Not necessarily an A+, but an A setup for sure. Low volume all the way down to about $70. Pressing into a horizontal level breakdown above 1 RVol, 3% ADR. Hell yeah. Below 50 RSI. Let's check the chain. We traded AMAT to the upside a year and a half ago. Are we going to be able to trade this to the downside? The volume is light for spreads and it's an expensive play. What did I say? What do we want? Price target around $70. It's a 3-to-1 setup. If you buy the 75, sell the 70, put debit spread. If you don't do that, you're going to be paying over $200 a pop on the 70s and over $300 a pop on the 75s. I'm going to write that out because it's not the worst idea. The setup is good, but the R to R I wish was just a little higher. It's a 3-to-1 setup. AMAT November. 124 for max. 376. So 3-to-1 AMAT November. Oops, 75, 70. Put debit spread. Once again, semiconductor exposure to the downside. If you do not have existing exposure to AMD or TSM, you can look at something like an AMAT. If you do, please do not add more risk halfway through a move. That's not how winning trading is done. Stick with the shit that's working. Tractor Supply Company, I think there's a reason why we didn't trade this to the upside. I think it's because the chain sucks. We have the same idea on the chart, but I don't love the... Yeah. No. I have the same idea on the chart already drawn, though, but we're going to skip that. Let's see, Delta. I'll show you why maybe I don't love the Jets shorts anymore. We missed the LUV breakdown that we were looking for as a group. For those of you watching the stream, this was an area of the market that we wanted to potentially short on the 34.5 breakdown, and we just had a lot of shorts already open, so we didn't chase this. We didn't want to add more exposure just in case we did get a pullback. This did end up capitulating based off of what we were looking at, but now Jets is already down near COVID lows, and so I don't know if I'm at $28. It's not leaving a whole lot of real estate to the downside here in terms of strikes. We can look at DAL. Well, not my favorite setup. There's a shit ton of volume down here. Price target would probably be somewhere around 24 or 23.50. Yeah, I don't like it. The setup is there, but the chain isn't giving us something that feels comfortable shorting target. Target was one of the group's best trades over the last year and a half, 2 years. If you're watching the stream, you can see previous trade idea here. I don't know if anybody took this one either, but hit the price target. Here we are once again to the downside. I don't know if I'd take this until we're sub 140. And then it's only about a 6 or 7% drop down towards COVID highs. So I think this is an XRT related name, if I'm not mistaken. And XRT did break below. Yeah, it did break below on Friday. So we are looking to short retail, but I don't know if target's going to be the best opportunity here. We don't necessarily want to be shorting with only a 6% move to the downside expected. There's not enough potential reward for our money. But I am surprised to see target down here. E2 tech IPO, $6, bro. Josh, what the fuck? NetApp and tab. So once again, on the stream, you guys can see it's the same setup every single time, and that's why we do it. Obvious level here at 61, 61.50. Above you look to go long, below you look to go short. No open interest on the chain. We're going to move on from NTAP. KSS, another one of those retail names. We're not going to be able to get enough open interest on the chain to get down there. I don't think. Yeah, not enough. For anybody watching the stream, we try not to buy anything unless there's over 1,000 open interest, so we know that we can get out of it if we do get a winning trade. The worst thing you can do is get into a trade, it moves in your favor, and then nobody wants to buy it from you. That's the worst. Dollar Tree. Here's a good question from a trading perspective. Would you count the island fractal in May as part of your analysis in terms of potential support? Those of you watching the stream, this is what we refer to as an island reversal fractal. Gap down, gap up, all by itself. Would you guys utilize this? I don't know what the correct answer is. I was just wondering. Okay. Is this a Staples name or is this just retail? It is retail. Let's go ahead and pull it up. Dollar Tree. There's enough open interest here to potentially get short. About 500 open interest across the board. Sub 120 for that price target down towards next high volume node, somewhere around like 115, 116, coincides with previous resistance area in the beginning of 2021. See what type of strikes we're looking at here. This is only a 2.68 ADR, so it's going to be moving a little bit slower than what we normally trade. Something to consider here. Not an A+ setup to me because of that. And the market isn't valuing it as an A+ setup either. The 125, 120s, which are well within reason, are only being priced in for a 49% chance of a 50% move. It's not my favorite. Let's see what else. We're going to run about 3 minutes late, guys. Just let me get through the charts that you guys have posted, and then you guys can hop off, and I'll sit on the stream with, if anybody is still here, feel free, but I'll sit on YouTube for another 15 minutes and answer questions. Carvana breaking into new lows. There we go. Potential all-time lows coming in on Carvana, but we don't want to be shorting something that's sub 20, and we're right there. Check the changes for shits and gigs, but 200% IV. If you want to short this, I would be like selling covered calls or something. Ah, fuck that. It's playing with dynamite. No thanks. But new lows on Carvana is hilarious. Hubspot. I love this chart. This is a great looking chart. Here we go once again for the guys watching the stream. The HUBS. This is a fantastic setup, but I guarantee you there's going to be fucking no goddamn volume on the chain, which sucks. 570 average volume, or 643,000 average volume on the day means there's probably not going to be open interest on the chain, but this is what we like to find. Horizontal level breaks down towards 2020 highs with low volume nodes, which is what Hubspot is. It's a potential 26% move to the downside. No open interest. That sucks. That was a good setup. HUBS. Activision. I don't know if this is shortable or not. Are they still getting bought by Microsoft or whatever? Is this something you want to fuck around with headline risk-wise? From a technical standpoint, sure, but you have the helmet-wearing gap fill people are going to scream about down towards 65. But I don't know if I'd want to mess with a short right now that is supposedly being acquired by Microsoft. Still, probably not in our best interest. Bros. Consumer discretionary name, right? Yes. That is an active chain. No R to R. The 30-25 puts are the only two puts with open interest, and that gives us like a less than a 2-to-1, so no open interest on the bros. So as of right now, let's see, we got like two more charts. We got Bed Bath & Beyond. Or is this Best Buy? Here we go. We looked at this at the end of last week. Is there no open interest on the chain? Man, I don't know if you guys, there's lots of different things here for us to be like, yo, this is not 2020 anymore. But the most telltale sign for me is the lack of fucking volume on the chain. You used to be able to trade anything you wanted with literally zero regard and get filled. Now finding charts with volume is hard. It's ridiculous. T-Doc, all-time low. No, not all-time low. 5-year low. T-Doc's out of the question. Not enough open interest. Best Buy, not enough open interest. Texture says MO. This is a smoking-related company. I think this is going to be a hard trade. Yeah, this is going to be hard. There is open interest, but this is just going to be a hard name to trade. It's 2.22 ADR, which is actually higher than it used to be. This used to be like a 1 point something ADR, so there's a little bit more volatility in MO, Altria Group, than there used to be. But I think this chart is a mess. Even off of the $41 horizontal level break, you got a capitulation supposedly. Not even a capitulation because volume is still low, but you got like a 1 or 2% move off that. I'm good. From an opportunity cost standpoint, maybe MO is not the best, which is ironic, Texter, just simply because you traded ABT, and that was a slower mover as well. Anybody watching the stream right now, Texter traded ABT, which was a slower mover, 2% ADR. He closed this on Friday for a win, but this was one thing that we needed to work on, was that identifying the more volatile names in areas of aggressive movements, and Abbott was not going to be one of those names, and it acted accordingly. Still a good trade, down 5% off his risk on level, and if I'm not mistaken, I think he banked 30 or 40%. People are not trading options anymore. Retail wiped. Everyone blew their accounts. You're right. We just went through 60 charts as a group, and I didn't even include all of the ones that we have on the scanner right now. I'm going to do them right now. And we found like 2 with volume. As did you guys think are we in a bear market? I don't know. There's no fucking volume on the chain. Spy all day. All right, so as for the group strategy session, I'm going to keep going through scans. Sunday Night Football is on. You guys can go have fun. I'm going to keep going through the scans. I'm going to sit on live with these guys and kind of answer questions and stuff. But tomorrow morning, check the charts and setups. I will have updated charts on the positions that we're currently in, and any positions that I end up finding tonight that we can open up for tomorrow or Tuesday, they'll be in there. All right. For those on the stream, give me 1 sec, and we can keep doing this. All right, guys. I'll see you in the morning. For those of you that are going to watch the stream, I'm going to hang out with you. Just with you guys right now, so feel free. Any questions you guys have you on the right-hand side of the screen here, so I can go ahead and answer anything that you have. But really, I think the theme for tonight is the lack of liquidity on the chain. There's a lot of reasons that people can make for a bear market, but the simple fact is retail options trading is down year over year, I believe. I know studies came out in like Q2 that said that year over year retail trading was still very high, but it's noticeable. It's very hard to find trades that have open interest and volume on the chain, and you have to have open interest and volume on the chain if you are a net buyer of these contracts. Like, you need to. Like I said, the worst case scenario is being able to buy into a winning position and then not actually being able to close it. That's the fucking worst thing. Don't find yourself in that situation. Since you guys are still here, I'm going to keep scanning. Feel free to ask any questions, and I'm going to let you guys in on anything that I see here, thought process-wise, etc. And if you're in the group and you're still in here, feel free as well. You guys can talk on the microphone. I don't give a shit. Chart pattern that we're seeing over and over and over again. For example, this Google play here. We had two guys that were short Google. This is not, I guess this isn't really necessarily the best example of this, but what you're going to see is you're going to see that horizontal level that we love to short, but you're also going to see something of like a rounded top. This isn't necessarily a rounded top, but what does this actually signify is more important than what it looks like. It's an area of consolidation, right? It's an area of consolidation that is eventually broken to the downside. And we've seen this pattern over the last few weeks all over the market, and you're going to see it in the scans right now, names that haven't broken to the downside yet, that have showed relative strength. Google showed us this consolidation pattern. We actually started to potentially place higher highs. This was when the market was actually starting to reward risk. It's ironic that the big cap blue chips did not get the same sort of inflows that the small caps did. So if you see things like Goog not necessarily making a whole lot of new highs, 16% in hindsight is not really that great when you compare it to things like biotech names that were going absolutely insane at the time, up like 80 to 100%, shit like that. And it was for a very small amount of time, like 6 weeks overall. But realistically, if there was a way you could time that bottom, congrats. We grabbed it for like 2 weeks. So two weeks out of the 6 weeks we were long, and we made money on it, but not nearly enough. And then here we go, complete reversal to the downside. You're going to notice this chart pattern a lot, this rounded top with a horizontal level break. So as we go through these scans right now, like, you're going to see it over and over and over, and that's good because you can trade that. If every single chart has the same identifiable chart pattern, like, check this out. What is this? Honeywell. I'm not saying this is a trade, but got the horizontal level with the rounded top. You can trade these if you're looking to go short, and you would use this horizontal level as potential risk, right? You could say, listen, below 168.5 or 169, I'd prefer to be short. Above this, I'd prefer to either close my short or be long, right? Eventually, not necessarily going long off of the 169 breakout, but you'd want to stop looking to short this. So Honeywell broke to the downside on Friday. This is an XLI related name, one of the largest in the sector. It's an industrial name. Used to have a shit ton of open interest on the chain. We go ahead and check out the Novembers. You got like 500 open interest. It's insane how low of liquidity there is. Do you really want to open up a contract where only 500 contracts are currently opened? Yeah, it's... Man, and it's expensive. Actually, it's not expensive. Excuse me. I'm thinking about Caterpillar. But still, there's no open interest on this. So it's like very, very hard to find available trades that make sense on the chart and then convert over to the chain. We've definitely become a lot more selective this year inside the group when it comes to trade selection. You can't get away with opening up 20 positions at a time anymore. Like you used to be able to just run the gambit on sectors and industries. Now we're choosing between 1 and 3 per sector. That's it. That like sector. So if we're looking to go short, you have 1 to 3 opportunities to go short. And then you sit in those as long as they work. Opening up additional avenues of risk is opening yourself up to a pullback, which has happened many times this year, and blowing up large amounts of your account. You do not want to do that. But it all starts with trying to find volume on the actual chain. Let's see, MMC. We got some guys in the group that are still posting charts. So Let's go through those really quick. MMC. This is a KIE related name, an insurance name, I think. We talked about this on Friday with Kevin. For whatever reason, insurance is getting sold to shit. Zero opportunity on the chain. Less than 20 open interest on every strike. But from a homework standpoint, the guys watching the stream here, see what we're talking about? Obvious levels. We break down below. We're looking to go short. You have low volume all the way down to about 120. So yeah, this looks like a very shortable name. But once again, on the chain, there's no open interest even on the Octobers. So can't get short here if nobody ever wants to buy the position off you. WRB. Yeah, kind of. Matter of fact, this might be a better name to look at if the market starts to turn around. This has held up better than other names. What is this? Property casual insurance. This might be a name that if the market starts to turn around, we can open up to the long side, because this is showing relative strength across everything else, but there's no open interest on that either. Texter says Boeing. Hey, my man Texter. Yes. Boeing was on my no trade zone list. Might still be. But yeah, you're right. The setup's there. So let's look at the chain really quick. You know there's going to be open interest on Boeing, but we just have to make sure the price target makes sense with it. Let's see what the fibs line up at and see if they give us any hints of something. 85, 86 bucks. Man, the COVID lows were 90. Ugh. Probably from a price target standpoint, we're going to be running with just the deltas here. The setup is here, but the chain sucks. The open interest is there as well, but the risk to reward is not great. I'm assuming it's because puts have appreciated so much off of the last few, like, week or two, I guess, of just straight fucking falling off. But looking at, like, what's realistic? Like, buying the 0.29 and selling the 0.22 delta, the 110, 105 is going to give you a less than 3 to 1 R to R. Buying the 105 and selling the 100 is going to give you less than a 4 to 1. 105. Let's see, at 3.69 ADR off current price down towards 105 is going to be a 11% move. I don't know. Gut feeling right off the bat, I don't love the Boeing short based off of the chain, but the setup is there. But I think that I'm going to post it to look at it tomorrow and see if we get a pop back up, because the setup's there, but the risk reward on the chain is just a little too wonky for me. I want to try to skew these at least 4 to 1 or higher in our favor with realistic price targets. You don't necessarily have to hold the spreads to end the money, but you want to be able to give yourself the opportunity to capture that maximum profit if it presents itself. And at a 3 to 1 and something that's already near COVID lows, there's probably just a better opportunity in the market. But we'll look at how Boeing reacts tomorrow. And we haven't even broken down from 120 yet, which is our trigger. But good eye either way. Texter's been here for three weeks now. He's throwing charts in the group like a boss. How do you guys decide what FinViz settings to add based on your market analysis? That's a good question. Let me go ahead and pull it up. So we have a couple different scanner settings that we utilize. Tonight's session, because of time, we were only able to go through one, but we typically start everything with a 50-day high or low, depending on what we're trying to scan for. So if we're looking to potentially short areas of the market or continue to manage our shorts, we're going to look at what areas of the market are hitting 50-day lows. That's going to give us an opportunity to look at the weakest of the weak, right? What is habitually showing us 50-day lows is a great starting point on where are the individual companies of the weakest sectors, if you will. So what we do when we go to overview, we actually filter it by sector, and we generally already know which areas of the market we want to get short from a sector standpoint, and right now we know it's tech, usually, or not usually, but right now it's tech. It has the most froth, clear runway down to 2020 highs, and so we're looking at all these 50-day lows within the tech sector. But when we run this original scan, we want to get a general idea of like, okay, is there anything that stands out that we didn't actually get when we looked at CoiFin? And sometimes it does happen, but generally we already know where we're going with this, and then we'll sector out some of this stuff. So we'll go through and just do what's hitting 50-day lows right now, just specifically within the tech sector. And then we'll go through these charts, every single one. Sometimes there's 300, sometimes there's 30. It just depends on how the market is moving. And we're going to look at opportunities to short. This is how we're able to find things that before they move. And even after they move, we buy them on the pullback on that BRB setup. So we run 50-day lows. We run 50-day highs. Sometimes we'll run 20-day highs or lows depending on where we are at in the market cycle. Last week we used a 200-day moving average where we looked at what we're trading above the 200-day moving average just in case the market started to turn around. We talked about that at the beginning of the session here. What areas of the market are trading above the 200-day moving average? That matters to us because we understand how institutions think about the 200-day moving average. We always have optionable or shortable on because obviously a lot of the guys are options traders in our group. And for the short side, we understand that squeezes happen. If we're going long, we would prefer to be on the front side of that squeeze if possible. Average volume, we use over 1 million just to try to, well, not to try to, we filter out all of the shit we're not going to be able to trade from an equity standpoint. We don't trade anything less than 1 million. We're not a low float, low volume, small cap group. We want liquidity. And so we just say anything underneath 1 million we don't want to. Also, it generally does a good job at filtering out, or it used to at least, filtering out options chains that didn't have any volume whatsoever. Now it seems to be like maybe maybe this is not a good filter set for that, but we have priced over $20. We don't want to be shorting anything under $20. It just doesn't make any sense. Generally, the options chains have like 3 strikes, and if you're a newer trader and you think, well, this only has to go to $15 and it's $20, it's like, well, yeah, but that's 25% of the company that you're expecting the price to move against. Unrealistic, right? So we try to stick above $20. We don't want any of the small cap crap that is moving pennies specifically for the options guys. And like I said, we'll tranche out the market here through sector. We'll go through industries. For example, I know we want to be short semis, so we were looking at 2 weeks ago semis, this exact scan. This is how we found AMD. This is how we found TSM, things like that. And then we also use change from open, up and down. So if we see, let's say, a new low intraday, and then at the end of the session, a huge pop back up, let's say we want to continue to get short, we would go ahead and use change from open down. And what that will do is it'll filter out all of the names that came down, hit 50-day lows, and also closed red. So they did not participate in the end of market rally, which means there's very little relative strength in those. If we're looking to go short, we want to short the weakest companies. So lots of little like tips and tricks you can utilize in your scanner settings. I will say right now that screeners are as good as you are. So if you know what you want to find, basically any screener is going to work. But that's the beauty of it. You need to actually know what you're looking for. And I don't know if you've ever used like Facebook ads or anything, but back in the day you could target like you get so incredibly detailed you could target like almost a specific person. It's the same thing with these scanners. If you know exactly what you're looking for, you can build scanner settings to find that particular setup every single time. And that's what we do. It's not sexy, but it works. So all right, I'm going to get through the next half of these, and then I'm going to call it a night because my throat is starting to fucking hurt. Let me get rid of all the ETFs and stuff. Citigroup, we are already short Citigroup. Bank of America was a name that we saw tonight that we might be looking to short tomorrow. If the guys inside the group don't have financial exposure right now, BAC is giving us a potential breakdown. Don't want to front run it though. Have to preface everything. We do not front run very often within our group. LUV we missed as a group, but that was something we were looking at. Ironically, railroads are still down. That reminds me, I have to DM Tattered. He's asking about the Dow theory. So I could probably make a video on that actually. Dow theory is great for these railroad companies. We have AMAT, that was on the list for today. AVGO. Potentially already capitulated. So you can see the trading plan was already on the screen. Apparently we looked at this a week ago. We got the move. We're down, 5%? So AVGO is something that we don't want to chase here, but here's a good example of something that we were looking at as probably last Sunday, it looks like. But we had better opportunities than AVGO. We had AMD, TSM, etc. So AVGO, a semiconductor name to the downside, ended up breaking down. One thing I will say before I wrap this up, as I finish the charting portion, is we don't necessarily congratulate each other on winning trades. We don't. We win trades all the time. As a matter of fact, and I'm not gloating, if you're not winning trades, there's something wrong either with you or with the group, and you shouldn't be in the group over time, right? That kind of like, you're not paying to be friends, you're paying for performance when you join a trading group. You end up becoming friends, but that's not the reason why you're there. So if you're not performing, you generally leave. It's like that in everything in life. So we don't necessarily say, wow, congrats, you made a 10% trade or whatever, you made some money, good job. We congratulate each other on the quality of the trading decision. And the reason why I bring this up is because we can use AVGO as an opportunity here to talk through this. If you shorted AVGO at the 468 break like we'd originally expected, over the next, which was a BRB setup by the way, over the next 4 sessions, it's down 5%. Great trade. There's nothing wrong with that. If you bought the 440 or the 450 puts or something, I haven't checked the chain, you'd be up in this. There's absolutely no problem. But then you look at it from the quality of what we were actually looking to short, and AMD is down 15.49%. Same industry, same sector, different name with the same setup, but different parameters going around it, right? There's a low volume node. We knew that we wanted to test this horizontal level to the downside. RSI is firmly below 50. ADR is near 4. Right? All of these things contributing to why we wanted to take AMD over something like an AVGO where the ADR is only 2.65. There's volume underneath the horizontal level, so we didn't necessarily expect a capitulation. In this case, AVGO is a winning trade if you shorted this. But is it the same caliber as AMD? No, it's not. So the guys inside of TTI, we don't necessarily say, good job, you made a winning trade. That's rookie shit. What we do is we congratulate each other. Did you make the right decision? Did you short the best opportunity? And in this case, it was AMD. And the reason why I bring this up is, I don't know if he's still in here. He is, Dustin. We have a trader in here that, if you've been following us on TikTok, his name's IW Beyond. He's the guy with the 1,100% winner in IP right now. He has 125% winner in Apple right now. But he's short TSM. And he's up over 100% in TSM. Right? It's down 11%. There's no problem with that. But when everybody else in the group bought AMD, he bought TSM. AMD is up 400%. TSM is up 100 and, Dustin, I don't know, 150, something like that. Whatever, going to say, you're an idiot.
Yeah, 100 paltry 160.
so he's up 160% on his TSM position. Yeah. But was it the right decision to short TSM over AMD? No, it wasn't. It was the wrong decision. No, it wasn't. So, by the way, I'm trashing you because I love you, but it's a perfect example of what we mean by, is it the best decision? Did you make the best decision? And in this case, no. But you did with IP, so.
It's all good. I have losers, but I have big winners, so.
Yes, you do. All right, let's see if there's anything else here. The market sucks right now. A lot of the things that we want to short are already dead, and the things that are giving us setups have no volume. So, oh man, I guess you're just gonna have to enjoy that Apple short for another day. Did you see Tesla missed on their deliveries, and Elon Musk came out and said that he is dedicated to increasing deliveries over Q4, which sounds bearish as shit. Your Apple play is probably going to be up even more tomorrow, huh?
Well, that's the goal. And then, I'll trim probably half of it in the day tomorrow.
Smart man. Coming up on a high volume note at like 135-ish. Okay, I'm going to hop off stream. I'm going to hop off the stream. Are there any questions really quick that I can answer before you guys leave? Or before I leave, I should say. I'll give you guys about a minute to type those out. I'm streaming for an hour and a half. My throat hurts. I don't know how some of these guys stream every single day for like 10 hours. It blows my mind. As you guys are typing the questions, I will let you know we are short right now as a group. Blackstone, that's a bank exposure to the downside in financials. Antaro Resources, it's a natural gas / energy related position that we might actually end up losing tomorrow, depending on how the market opens up. But I'll show you the setup, kind of see what we're looking at here. Generally speaking, we like the horizontal level breakdowns with consolidations underneath, but natural gas is incredibly volatile right now, so we might get popped out of this. XLE is looking like shit here, and we were targeting somewhere down towards, what did we, 25 bucks or something like that. So Antaro might be a stop out tomorrow for a loss, but this is the setup. As you can see, it's a horizontal level potential breakdown. RSI is below the 50, and ADR is a massive 5.21. So even our losers, we choose the same setup. We do not try to get too cute on these. So AR, we're short Morgan Stanley. So once again, we shorted up here at this $84, $85 area, currently sitting at 79. So another financial exposure to the downside. We're short Citigroup. Financial exposure to the downside. You can see the horizontal level breakdown here. We shorted it off of the 44, 44.50 area, currently 41.67. So a bit slower of a mover, but the guy that's short Citigroup right now knew that because ADR is below 3. So it's a slower moving stock in general. We have one guy that's short BABA, God bless his heart. He wanted to play this Chinese short here off the horizontal level break. It looks okay, but when you get caught in these sideways consolidations, your premium gets beat to shit. He has lots of time on this, so there's not any worry that he's going to get stopped out tomorrow, but still some exposure on the books for BABA. We have the Apple short off of the 156 front run, 151 original breakdown. Like I said, these are all up over 100%. We still have the AMD short on the books. These are up anywhere between 50 and 400%. A lot of the guys have already taken profits and re-entered during this consolidation. Original position is up 400 and something %. We have, let's see what else, IP, which we don't need to go over, but the guy that you just heard talk is up 1,100% on this capitulation move off the $40. We still have TSM, same guy, and ABT I'm removing because I closed it on Friday. How do you know there's more room to the downside from the weakest of the week? We don't, and that's a great, I'm straight up, we don't. There are clues. I'll give you two areas of the market that we focus on that give us confidence, but you don't ever know. If you are a swing trader and you are trading trends, which is what we're doing, right? Our time frames can be different. We trade 5 days to 5 weeks. There are some guys that trade like monthlies. There are some guys that trade yearlies. Swing trading is legitimately holding a position overnight, so it could literally just be an overnight trade. We focus on 5 days to 5 weeks, right? So time frame matters in terms of that question. One thing we've been keyed in on for the last year are these 2020 highs. Realistically, that's it. If you look at something like the communications sector right here, we keyed in on these 2020 highs for the last year, and we were short names like Facebook. We were short names like Google. We were short names like Snapchat, Pinterest, all of the social media companies, everything within this sector. This was the worst performing sector last year, and it is the worst performing sector this year. So we utilized the 2020 highs as our first real area to focus on. If we have not reached those 2020 highs yet, let's short down towards that area. Now, when you start getting sub 2020 highs, when it starts to get murky, this is because your perspective is all thrown off, right? A lot of these companies right now, like Meta, for example, these things are beat to shit. Right now, Meta is below COVID lows. Yeah, there's definitely an opportunity for this to continue down. But how much lower can it possibly go? I have no idea. And so when we look at things like this, for example, Meta, we did take the short off of the 160 breakdown. I think the original price target off of that was the COVID low. I don't know what Vinny ended up doing with that. I know he closed it for a profit. I don't know if he waited for the full PT. But when you look at things like Meta, price targets are generally just going to be based off of fib extensions to the downside or previous price levels. But if I see two charts and one's above the 2020 high and one's below the 2020 high, they're both showing bearish moves in sectors and industries that look weak, I'll give the nod to the name that's above the 2020 high because I know that point has been stuck for a year across every sector and industry. Literally everything has come down to touch that. It's also the reason why I like shorting tech here. Its sentiment level is we're firmly below it at our 125, but look how much froth we have until the 2020 highs. We still have 13%, and in a major ETF, that is huge. Look at semiconductors. Look at your 2020 highs. From current price, semiconductors still need an additional 17% to get down there. So when you hear people on the media and stuff talk about froth, this is what we're talking about. Froth is like, where is there still a shit ton of value that maybe needs to come back and test key levels? Well, if everything's coming back and testing key levels, there are areas of the market that have yet to do that, and they just so happen to have areas on the chart that look like you could be attacking them, AMD for example. So I will tell you, as a trend trader, more often than not, you will short the bottom and lose. Just like you will buy the top, you'll buy a breakout, and it'll be the actual top. But that's fine. It's part of the game. What the goal for us is, at least, is we don't care about necessarily timing the exact top or the exact bottom. We want to capture the 80% in the middle. So if we end up shorting the bottom, we'll get bopped out. It's just like any other trade. We'll realize that it's the bottom over time. Generally speaking, it'll be somewhat of a rounded bottom. You'll start to see some sort of something like this start to form. And then we'll draw our horizontal level and we'll buy the breakout. It comes with the territory. But those 2020 highs are generally what we're using right now as a gauge of how much more can we realistically expect this to hit. And then if we start getting below those 2020 highs, we just run fib extensions. Okay, guys, I'm going to hop off. It's been real.